Next up, we have a presentation from Tom Revy, Managing Director of BlackEarth Minerals with the ticker code BEM. I will now hand you over to Tom for more on their Mineary Graphite Project and their downstream graphite processing deals. Hello, Tom.
Hello, Jane, and thanks very much. BlackEarth is an ASX listed company, code BEM, which listed just 3 years ago. In that short time, the company has achieved much thanks to the efforts of our team, evolving from explorer to developer, and today we have a clear path to cash flow across not one but two integrated projects. Our vision is clear: to become a material, vertically integrated player in the global graphite supply chain. Also, given the time constraints, I'm only going to cover our two highest priority targets at this stage, being the Mineary Graphite Project and the Expandable Graphite play that we're in at the moment. In terms of our Mineary Graphite Project, it's located in southern Madagascar and is now about 2/3 of the way through the DFS or BFS, which is scheduled to be completed earlier next year. Graphite concentrate has been thoroughly tested, both by reputable international laboratories and also Tier 1 end users. One of our key differentiators is the coarse flake nature of our product, a product with significant demand growth, a significant price premium over most mined product produced globally, and an outlook of substantial shortfall in global supply in coming years. Our downstream strategy is now bearing fruit. As announced to the market, we are now in the process of finalising a joint venture agreement with a long-established and reputable expandable graphite producer, Metachem, to co-construct a 2,000 to 3,000 tonne per annum expandable graphite facility in India. Our plan is to be in cash flow within 12 months from now. A strong endorsement of this plan is that we recently signed a full legally binding agreement with a Tier 1 European buyer of the product, being Graphite Bergbau. Finally, for all the reasons I just discussed, the critical graphite market looks strong and the outlook looks even better. Corporate snapshot. The company has a strong commercial and technical team with significant graphite and African project development experience. With only around 200 million shares, the company has a healthy cash balance and, despite a low enterprise value, has provided an attractive return for those who invested over the last 6 and 12-month periods. Like many of our peers, June has been not a good month in the market, but investors will hopefully be pleased with the news flow to come in coming months, which I'll elaborate on later. I've shown this graphite demand slide before, but it's a very important slide. Buyers of natural graphite products are acutely aware of the impending substantial demand in graphite across all flake sizes. There is an obvious chasm at the moment, however, between end users' knowledge and investors' perception on where graphite is going. For me, it's only a matter of time before the market picks up on the likely supply deficit market commentators are calling for 2024 to 26. Of critical importance to our plans is the potential development of our expandable graphite plant and the Madagascar mine, both planned to come online prior to this shortfall, which we believe should be enormously beneficial for shareholders. Madagascar for us has always been a real differentiator with our peers. While many of them have slowed down development plans over the last 5, 6 or even 8 years, we have moved expeditiously from first hole to where we are today in just over 3 years. This couldn't have been achieved without the assistance of local stakeholders. A country with a very long graphite mining and export history, together with its reputation for quality product, makes Madagascar a no-brainer for us to develop and operate in. This gives a view of our leases in Madagascar. Note that each of these green areas represents a graphite mapped from surface, an area covering roughly 3.5 kilometres by 7 kilometres. Our Graphite resource sits on a granted 40-year mining lease, with our current exploration activities in the high-grade area to the northwest of Razafie is marked. Only 10% of our lease area has been explored in any detail, which has a defined exploration target of 260 to 380 million tonnes at 6 to 8% total graphitic carbon. We are operating in a truly envious graphite district, comparable to anything else in the world. I've previously shown our study outcomes, which demonstrates both technically and financially robust project, an attractive MPV and IRR for a startup capital which is infinitely financeable by any junior. What's new to the slide are our current enhancement programs, which the board believes has the potential to significantly enhance the project's value. All these activities will be completed as part of our current DFS program. We'll report to the market on the findings of each of these individual activities once completed. This slide provides a simple picture of our activities and how each carefully relates to our overall strategy of being involved in the global graphite supply chain. While our immediate focus remains on the development of our low-cost expandable plant and the completion of the Manaere DFS, we will continue to review other downstream options more as a medium long-term strategic venture rather than overloading our current available funds and capabilities at this stage. Social and community activities, interactions are paramount to the board's ESG program. The list on this slide reflects only some of the commitments BlackEarth has made to date, a small portion of how we interact with all Madagascan stakeholders. Local villages to date have demonstrated enormous support for the development of an Manaere Graphite Project. As the slide states, this entry into downstream processing is a low risk and capital entry into that market, which provides shareholders a higher revenue stream and company cash flow expeditiously. Our intentions are to become the first ASX listed company to produce this highly sought after, highly priced product. As announced last week, we already have a legally binding offtake agreement for up to 2,500 tonnes per annum of expandable graphite. While we will initially purchase raw material and market for the facility, our intention is to feed our own product into the plant in 2023 once our Manaere project is up and running, thereby realising a much higher margin for our shareholders. Is our raw material good enough to compete globally? Well, according to independent German laboratory NGS, it's a very clear yes, as shown by the quote in the bottom right-hand side of this slide. In order to explain our tactics and to reflect the importance of this slide, I'll simply read from it. Why expandable graphite? Strong demand outlook with an impending global shortage in raw material, coarse flake supply. Manaere material has proven to excel in this area. Why Medichem? Well, they're one of the pioneers of expandable graphite and has been in production for over 25 years and has an exemplary reputation with tier 1 global buyers. And finally, why India? India, well-educated and cost-competitive workforce available with specific skills, knowledge and experience in expandable graphite production. The availability of the necessary raw materials, specifically the reagents, a good and attractive government fiscal regime, including incentives, excellent government ties between Australia and India. And finally, our overall news flow catalysts. A detailed download of the recent large-scale pilot plant program will be issued shortly, outlining the details necessary to progress our DFS. Results and activities from our exploration works in Madagascar and Donnelly River will be published every few weeks as soon as we have the results. Ongoing reports relating to our expandable graphite plans with Medichem will be a regular occurrence. The completion of the joint venture agreement, the completion of a short-form feasibility study, the commencement of construction, etc. The appointment of an independent engineer to complete the engineering and costing details of our Manaere DFS. That should be announced shortly to come out to be in line with the results achieved through the pilot plant program. An expanded Manaere resource based on our current exploration efforts in the Razafie Northwest area. And finally, continued offtake arrangements and discussions with various other groups. And with that, I thank you for your time, and I'm happy to take any questions.
Well, thank you for that, Tom. It's a great presentation and always great to have you back on Broker Briefing. So I'll jump into some questions. Does the company plan to focus on advancing the existing downstream graphite deals, or are there further opportunities currently being explored?
The answer is yes and yes. But look, we have enough on our plate. And as I said, I've just covered the two key priority areas. From a downstream processing point of view, we'll continue to work with other companies in terms of where we can add value for shareholders. So that'll be a constant sort of thing. In terms of that'll be more medium to long term though, because these things take time. They need samples to be tested by these parties, etc. So that's important from our perspective. And you know, it's an ongoing thing. But right now, short term, complete the JB with Medichem and focus on that DFS.
Wonderful. Well, that's all we've got time for today. Thank you for joining us, Tom.
Thanks again, Jay.